Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over the pump on Doge under the continued speculation about whether or not Elon Musk will integrate it with Twitter. Of course, that's being fueled by other news that crypto is being integrated into Facebook and Instagram, as we see the pumps on Arweave and also Polygon in the news that Facebook will be integrating it with the Meta wallet. So, guys, we do see many coins just pumping off of the overall bullishness in sentiment, despite what's going on in the traditional markets, including some rallying of coins such as Chili's related to the World Cup and other events going on. So we are seeing some very interesting phenomenons, in the market here, where we actually can see just green across the board, whereas in the traditional markets, it's very red. You do see the tech sector. We have Apple down 4%, Google down 4%. Amazon down 3%. These are huge numbers for these companies. These are not small, cap, companies. And so when they move 4%, it really is extremely bearish. And yet crypto is just holding the line. Of course, none of that news really, surrounds Bitcoin. So while Bitcoin may be going sideways, the market is, the overall markets are going down, and the crypto is just pumping left and right. So it's a very weird atmosphere right now, especially as Jerome Powell and the Federal Reserve remain quite bearish and quite hawkish in terms of their stance. Tomorrow, we will be receiving some unemployment data, average hourly earnings data, and that will go into the Fed's calculation as to how harsh that they should be in December. Of course, they were quite harsh this month, doing the maximum increase of 75 basis points, as well as being just a kind of draconian and extra harsh in the discussion with the media. They do not want you to think that they are going to pivot, and indeed, they may not pivot. They're actually increasing the expectations of how harsh they're going to be, and that it may take longer, and that it may be harsher than you previously expected. So, guys, the market is feeling very confused as to the next steps, at least in the crypto market. In the traditional markets, they are seeing, significant pullbacks in many of those companies, as we just outlined. If we do take a look at the Bitcoin chart, you can see that we are still essentially hanging on to that support line here and getting a little bit of a bullish tease right here. We have been at this level several times, so it's not really that big of a deal. I'm on the 1 hour right now, so this might look a little bit more complicated. On the daily, of course, it just looks, just like a thin kind of ribbon there, just kind of a little bit of a retracement of this overall bearish series of candles. But if we do go to the lower time frames on the 4 hour, let's go ahead and throw on our EMAs just to see what we look like. We do have a little bit of a squeeze going on here on the 4 hour. And so if we are able to break that 50 EMA, right, that blue line right here, then that would be, fairly bullish, especially if we can quickly follow up with the 21 EMA. Of course, we do have the 35 EMA directly overhead, and so there's just a lot of these EMAs just kind of suppressing us right here on the 4 hour. But if we can pop through all of them, I mean, that might be a pretty substantial move, in my opinion, if we can just get a nice pop through there. If we take a look at the daily, of course, the daily can also show you that we will have recovered the the 9 as well as the 4 if we can close the candle above these levels. And so yes, indeed. things are looking better than that they were looking yesterday for sure. And I do believe that Bitcoin is being a little bit uplifted by the just a bullish news overall related to Facebook, the World Cup, Twitter, all of these things that are starting to integrate crypto and or potentially will integrate crypto. Which are just getting a little bit of a wind beneath Bitcoin's wing here. But Bitcoin itself, it's just been a slow mover. I remember, Ethereum had a huge rally, and Bitcoin barely moved on the charts. I mean, this was a nice 40%. So technically, it was a bull run, not a bull market, but a bull run. And but it was really, really hard to get this thing going. And so, if Bitcoin does have another series of higher highs and higher lows on the daily, I mean, it would just be a nice move. But this is very weak. It's just a very weak how it's been moving right now. And there is fear as we are bumping our heads into the daily 89 here that we have been just getting rejected, 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 right? We also didn't even come close here, but the 89 on the daily is just a really nice spot to get these rejections. That's the purple line that I'm talking about, of course. And so, we really do want to get above that purple line there, also, guys. If we go ahead and go to the weekly, we can see that we are, holding a candle above the 9 EMA. And although we're being suppressed by this yellow, 21 simple moving average, we really want to get above it in order to have that potential to squeeze up here to 22,500 and then maybe even 2,600 where we might bump our head on the 200 EMA as well as the 35, which is pointed quite down right here. So, guys, we're looking forward to potentially having a squeeze on this market. And of course, if we do lose these EMAs, then probably we're going to test our range lows, which does align up with the 300 simple moving average on the weekly, guys. So that's it for our EMAs. If we take a look at our price action, just to kind of see what our trend is here, let's go ahead and go back down to the 4 hour for detail. And you can see that that flag shape has been really evolving, right? It was a double top, then it was kind of a flag, and now we can really point out something perhaps like a wedge here, you see. And so if you make out the detail, it starts to, if you get to the lower time frames, you can start making out some of the detail that's telling you a story. And so the story is either that we're making a bit of a head and shoulders where if we lose this area, we're really in danger of having a measured move to the downside that would really, take us to this kind of lower range down here, right? And if we break above that, right, where let's just say that we have this kind of a triangle here, and if we're able to, just to break out of this thing and go bullish, then perhaps we have a move, back up into this area and get up on top of there, and then, kind of claiming those EMAs that we were talking about. So it is getting close to decision time. If we take a look at some of our momentum and how it's building up on these lower time frames, like the 4 hour, we can go ahead and see if we can expand that a bit. We can go ahead and just take a peek. Yeah, we are just consolidating right now on the 4 hour, so not much to say, but if we do end up with an extreme, likely we're going to have a breakout pretty imminent. Let's see what the 1 hour looks like. The 1 hour also pretty much just a consolidating for a while, so both of these are just in agreement. Let's take a look at the 6 hour. 6 hour is just a meandering, so kind of thinking about something, just very confused there. The 12 hour looks like it actually wants to expand. Wall price action is going in an up direction, so that's a good sign. Let's take a look at the daily. The daily is still contracting, so I do expect that perhaps we may have a little bit more of a struggle as we just try to break out of that wedge that I was showing you. And let's just go ahead and take a look at the 2 day. The 2 day is also very curved. It's not very pointed up at all. Let's take a look at the 5 day. And 5 day is actually coming to a conclusion of this contraction here. So, we don't see it on the floor, but we do see it perhaps getting ready to pinch to perhaps make a move to the upside, even if it ends up being meandering a bit. Maybe something like what you're seeing over here, right? Where it kind of like pinched off and then it made a move and then it pinched again for the real move. And so we may just have an interesting little move coming out on the 5 day, but we'll keep abreast of these volatility plays. Right now, it's just not the clearest picture. We are just waiting for this wedge to essentially break and to see whether or not we hold this floor or if we can bullishly test the top of this little consolidation range that we have going on here. Back to the 4 hour. Let's go ahead and check out our momentum pools. The alpha momentum pools have just been killing it in terms of the predictive value. Here I have the last several days of my momentum pools that I designed for this show, and so this is a little bit of my trademark. And you can see, while we do have pretty wild swings, we really aren't closing, 4 hour candles outside of the pool. They're just kind of like poking out, right? Just poking below. And so they really are swimming in my momentum pools. And here we have one that did, one candle that fully was outside of the pool. But in fact, it was just a continuation to the downside. If we take a look at the 8 hour here, you can see it's just one candle that breaches into the pool, right? And so we really can consider that that was just a movement down and it wasn't a breakout, right? The breakout candle itself, we didn't get a follow-up that was bullish. We got a follow-up that was actually bearish, right? And so we had to wait for that bearish play to continue. And then the same thing happened here, just kind of like poking up, a bullish candle, kind of just got a breath of fresh air, but then the next candle was bearish and took us back into the pool. And same thing here with this wick, right? That Jerome Powell scam wick, right? It just got some fresh air, then it drowned, and it actually created another pool that was just much below it. And so now we're in today's pool, and we're just swimming inside of the pool. We did actually just wick above it, but we're back into the pool. And so if we swim around to the bottom or the middle, whatever, it doesn't really matter. What we'd want to see is a couple 4 hour candles, uh, you know, um, you know, bullishly closing above it, not just pointed to the downside. Okay, like if you're long, you want to see a couple 4 hour candles, closing above it bullishly. And if you're bearish, you want to see a couple, candles closing to the downside, or just a God candle. Sometimes it's just a God candle. Like guys, if we just look back here, then in the previous pool, this was the play that we took, where if we were able to get above the momentum pools, then that would be the bullish sign, and just boom, like this thing just took us to heaven, guys. It just skyrocketed. And then same thing over here. We had this really huge momentum pool, and what happened is we closed on the inside after having been basically on top of this pool and this pool. and we just went for a swim and just went for a nice dive. And so that was quite a bearish movement right there. But we did catch the next pool, and again, like you can see these candles bullishly on top of the momentum pools. And so these alpha momentum pools really can show you the way if you start to get a feel for it and how to read it. And the direction from which price action is coming also matters quite a bit. So, uh, you know, um, if this is bearish price action, right, then then the bullish side is going to be much more significant. If it's bullish price action, then some type of a bearish breakdown is going to be more significant. So, guys, we do have to pay attention to this. Um, we've been having quite a bit of bearish action right here. And so the bullish action is going to be far more significant. In other words, basically being inside of the pool itself is by default bearish because we're part of a bearish trend, right? But so getting above that pool is highly significant. And so, guys, but getting underneath the pool, it could just be just a continuation of this trend, if you understand what I'm getting at. Guys, let's go ahead and take a look at some signals just to make sense of this. And we can see that for the, first of all, the top of that pool is 20,330-ish. The bottom of the pool is 20,205. So you're going to be bullish if you're above that. You're going to be bearish if you're below it. And because we are in a downtrend, just technically you're bearish unless you get above that, right? So again, like you know, it's more significant to close candles above the pool when you're in a downtrend, and it's more significant to be closing underneath when you're in an uptrend. Okay, guys. And so the bullish bias here, like a solidly bullish bias, is going to be at 20,440. And again, like I calculate these using 4 different types of momentum over 5 different time periods. And then a strong bearish bias is going to be underneath 19,870. And the thing about this is that we're actually going to still maintain some daily momentum, even if we push down into this area. So while all of this, right, all of this price action is bearish, and so any movement through here is bearish. We're just going to lose all of our daily momentum, that thrust that could kind of bring us to the upside if we break below 19,870. I hope you understand that. The nuance is important because, again, like we're bearish anywhere under the top. It's like we're a little extra bearish if we're underneath this level right here. And then we're solidly bearish here. And we've pretty much lost, the game, underneath like a 19,411. There are other levels that I can choose for this kind of like uber bearish, such as like way down here where, we have we have a lot of momentum still at these lower levels, which you can see, right? We've caught ourselves multiple times in this area, right? And so, of course, there are different momentum pivots that we could grab all the way until we get to like 18,000, 17,000. But losing this level right here, we are going to be fully losing our chance at some potential macro plays, right? And I think if I throw on the EMAs, you can probably visualize that on the weekly. Let's go ahead and just see what the weekly EMAs say about that. And yeah, so you can see like how these things kind of lined up. I mean, I use a totally different calculation for it, but look at this. You have the 21 simple moving average for the weekly right at my uber bullish. Like that's completely logical. We will be in a weekly squeeze play, right? With the higher time frames if we can achieve that level. And although it's not the 21 EMA, it's the 21. SMA, that's still very bullish because many people trade using the SMA, right? And so, and then look, if we're underneath this bullish bias, we're going to be underneath the 200 simple moving average, okay? And so that's a very psychologically important level here to be above. And so to be above that is to be bullish. And then just if we look at the finer details here, you can see that, well, basically this bullishness, and again, I'm looking at the weekly. Now, remember, I use 5 different time frames for this stuff, and so I'm just trying to like provide like that kind of bigger picture for the really big moves. So that's why I'm using the weekly right now. You can see this bullish-ish level is essentially saying, we got to hold up, like we got to stop falling. For this weekly candle can't fall anymore. Otherwise, obviously it's going to be bearish, right? And then we'll be under the 9 EMA, right? And that's always what I tell you. Anytime we're under the 9 EMA, that's not a good look. And then a solidly bearish bias is going to be right here. Look at this. We have the 9 simple moving average right where my bearish signal is. And then this, oh no, anyway, this kind of uber bearish level. Look, that's right where the 4 EMA on the weekly is curving. So although I did not consider the weekly EMAs with these calculations, you can see how just by coincidence of essentially the mathematical formulas that all of these different indicators use, and you can see how the EMAs do represent momentum. Now, it's not really a clear picture. That's why I make this scale for you. And that's why I use other types of momentum in order to calculate these things. For example, RSI, MACD, the stochastic, all of these things, including EMAs and price action and, et cetera, in order to establish these different levels, you can see that there is quite a solid logic for where we might end up and why these levels have the importance that they do. And of course, if we can get into these squeezes, I'm on the 1 day right now, but you see just how powerful these squeezes are between these EMAs, right? And so guys, you really don't need all of those indicators. You can just primarily learn how to use EMAs, learn how to use the MACD, learn how to use the RSI. And if all you're doing is learning patterns for candles, learning the MACD, learning the RSI, and then having some EMAs, I would suggest the 9 EMA, the 21 EMA, the 50 EMA, the 200 EMA, and that would be a pretty good set. You could throw in the 50 EMA, right? And the 89 EMA. Those are all good ones. If you want to have everything that I take a look at, then this is my list. Most people do not have this many EMAs. It's just that I like to analyze them and I like to see the different patterns that they make. But really, you just need the 9, the 21, a 50, an 89, and a 200. That would be considered a full set. Okay. As for the simple moving averages, the SMAs, sometimes just called MAs, um, some people prefer MAs, some people prefer EMAs, but they're largely used the same way. The EMAs are a little bit more responsive to a price action. That's all. So, guys, I think that's pretty much going to be your update on Bitcoin there. You can see the key price levels to watch. And so that's a 20,765 for uber bullish, 20,440 for bullish, 20,300 and 30 for bullish-ish, 20,205 for bearish-ish, and then 19,870 for bearish solidly, and a 19,411 for just my estimate of what would be uber bearish, right? Guys, I also wanted to show you one other thing on the charts. Of course, Gala did end up just having some type of a major hack today. So if we take a look at the Gala, I mean, yeah, I mean, it's definitely recovering. Oh, it has recovered significantly. My goodness, I was trading this earlier on the 30-second chart, and I'll show you all of the, all of the charting that I was doing here. I wasn't using the EMAs, but I did notice that we made a inverted head and shoulders. And so I on a double bottom, and I was able to play that to a 25%. And then this did take a significant amount of time to work out, but the rest of this head and shoulders did pop up. Kind of wish I had stayed in this play, because that was another 10% there. And so this would have been a just excellent 40% play here. But yeah, guys, I mean, Gala took a huge hit and it's almost fully recovered, but yeah, that was quite interesting. That was quite interesting today to see that either there was a hack or there was some type of issue with their, they're not their real tokens, but like their P tokens, whatever it's called, like P Gala. I'm not sure exactly what it is, but something happened on the dev side that makes using Pancake Swap right now a little bit sketchy. It makes using Huobi, the Huobi exchange, a little bit sketchy. You may not get your money, or your tokens may not be valid anymore. Like they're invalidating certain tokens. And so it's just very complicated what's going on with Gala. There seems to be like some type of a second layer. It's not real Gala. It's like fake Gala that got affected, and the way that these exchanges and the swaps use it. Uh, I don't know. Either somebody took advantage of it, or they got, or the devs just really made a huge mistake. I'm sure the details will continue to come out, but yeah, a nice 35% bounce off of that, 40% bounce, and dang, yeah, I really wish I had stopped at this red line, but yeah, that just continued to go up. So yeah, I kind of wish I had continued in that play. But guys, you can see that this is probably going to recover to it's already basically at its levels. And overall, this chart has just been incredibly trashed, right? Incredibly trashed from the top. I think this is one of the worst charts I've seen in terms of, just how low it got. Almost 97% down. That's crazy. Let's put it on log scale. You can see the kind of shape that it's in. This isn't the real chart. The real chart is the linear chart, but just to see it easier, we put it in log mode. And yeah, I mean, these are quite tempting levels to DCA in, to be honest. And so if you were able to buy at that drop there, I mean, that was probably a very good buy. Obviously 40% up already. But this thing really did get a nice rejection at this level and at this level, which previously was support. And so this isn't a bullish chart. I mean, this is a bearish chart. This thing just continues to go down, and this is probably going to hurt its reputation. So if it went down even further, I wouldn't be surprised. I mean, I don't see any breakout here, right? All we're doing is recovering from some type of a hack, some type of just huge dev mistake. Not even sure exactly what the details are, but this was eminently playable. If you were on the 30-second chart, it was just incredibly playable in terms of a bounce today. And it was just pretty funny that I noticed that double bottom and was able to just play this whole move out there, and then noticed this kind of inverted head and shoulders. We got to this major resistance that comes from really back here in the chart. A little bit too far to scroll on the 30-second chart, but it respected that line quite well until it just, just really broke it down. You can see this accumulation wedge that it put in eventually, and I wish I had continued to follow it because it never broke the lows. But you can see this accumulation wedge where it just accumulated, it broke out, it retested the wedge, and then boom, guys, like that was your chance to buy right here. If you missed this neckline or if you missed this double bottom, right, or the higher low. And now it's just kind of breaking down. So will it continue to break down? Not sure, but just a very crypto thing to happen in the market today. All right, guys, I'm a bit tired today, and this episode's long enough, so gonna wrap up there. But that was your alpha for the day. Stay safe and happy trading.